Alright. Good afternoon, everybody. Thanks for coming today. So, I have a few things that I want to go over today. Of course, I'm going to answer any questions you guys have. So if you have questions, I encourage the questions. Ask them at any time. Just type them into the question box. Alright, nobody else can see what you type, I don't think. So I wanted to go over what was it? Oh, options was one of the things. One of the things. Let's just look at what's Tesla doing right now. Where's Tesla right now? It is at 264, 265. Okay, it was up at 267 at one point today. I only asked because I've been following Tesla since it gave a long signal on Monday, and I said look at the options on Monday. As it was coming together on Monday, I was drawing went over it in the morning session today. For those of you guys that follow me in the morning session, I went over in the morning session today this thing called the Diamond Principle, and I started drawing it on on Monday for the people that were watching there about what I thought Tesla was going to do if it pulled back and if it gave us a long opportunity. And shortly after I said that, it did pull back and it did give us a long opportunity. And and at the time, the price of the Tesla calls, let me see if I can find that particular one. I think I actually closed that one, but it's let me open that up and I'll show you. At the time, downloads. Yesterday, not yesterday. Day before yesterday, not the day before yesterday. Let me do it by. I'll sort it a different way. It might have been in pictures. Yeah. Anyway, at the time, the Tesla calls were $5.05. I'll just tell you, they're $5.05, and since then they've been up above $13 since Monday afternoon, or Monday about 11:30, 12 o'clock when I went over that. So I just want to go over that a little bit with you and show you some stuff about options. But I want to go over the way back in January. I had done this thing with the Motley Fool picks, and the actual picks that they had listed. I just did a search at the time. I did an internet search for top 10 stocks because when I originally created this, I created it for equities. I didn't really create it for futures so much. I mean, it turns out futures is what I've been doing for the past 15 years. So of course it morphed into that, and it works great with futures as well as everything else. But I really started it with equities, and so I just did a search for top 10 stocks to get some kind of stock that you could look at and see, if it gave a long signal, to see how it followed up and did everything. And so these were the stocks that I looked at in that webinar that I did back in January. I think I did January 26th or 28th or something like that. And all of these were released at the beginning of January. So CrowdStrike, PayPal, Mercado Libra, Mealy, Airbnb, Shopify, and iSurge, and Disney. Those are the ones that I really looked at, the first 7. Alright, once you get into Berkshire Hathaway, I'm talking hundreds of thousands of dollars a share. It kind of goes off the rails there. But the reason I picked those, what I was trying to show people at the time, was that you can take any stock that you think is going to go up for whatever reason. Like, I get things in my email all the time from places like Zacks and everything else. Well, they recommend these stocks, and I don't know the first thing about it, and if it's already gone up some, I don't know if I've missed the boat, and that's what the TV trades was created for in the beginning. So like CrowdStrike, I don't know what it looks like right now. I just jumped right into it here. We're 5 minutes into it, and I just jumped right into it and didn't say anything about the initial stuff. For anybody that's just coming in here, who might be in here for the first time and not know what the heck I'm talking about, let me just look through the list in here. There might be some of you guys that are in here right now might have not seen any of this or know anything about all this stuff. Let me go through the initial stuff really quick, alright? It's Target View Trades. Obviously you signed up here at this, you signed up through an email link or something like that. But go to targetviewtrades.com. The homepage is right here. The trial, I'll jump right into that too. If you want to take a trial, the trial is free for 3 days. If you do the weekly or the monthly, it's only $25 a week to get started, or $90 a month to get started. And I hadn't even done the math on this. This is like a 23% discount over the weekly. if you do the annual. I hadn't even done the math on that. I thought it was less than 20% for some reason, but I guess it's less than 20% of the monthly. But it's like 23% less than the weekly. Anyway, those are the costs if you want to get started. All right, you do have to have TradingView charts. All right, you have to have TradingView charts. The only way to get TradingView charts is, I mean, you go to TradingView, but here, just go to the website, targetviewtrades.com. Click on Getting Charts. Right here it says TradingView Charts. That's going to bring the TradingView website. When you do this, if you haven't done it yet, the Essential will give you two indicators, and will give you 20 price alerts and 20 technical alerts. The alerts that are triggered through TV trades are they're technical alerts, they're not price alerts. Okay, that's what the Essential will give you. You can get the free one, the basic, but I think you get like one alert and one indicator that you can put on the chart. And one, you can get the free one, and it will work with the free one, but very limited. But do this on a monthly, not on annually. If you're just getting started, do it on the monthly until they have a sale. Because they had a sale last week on the 4th of July where the premium was like 70% off if you pay for the annual. So do it on the monthly in the beginning. If you don't have charts with them yet, do it that way. If you're going to trade futures, you have to have futures data. All right. If you're not trading futures, if you're trading stocks and equities, I don't pay for the, these are the prices that I get. Oops. These are the prices that I get for stocks without paying any extra fees for stocks. All right. So you get all that for free. But if you want to trade futures, that's a different thing. In futures, what I have to do is go here and go to TV trades, go to account and billing. Let me just save on this. Go to here. TV trades is what you need to give me, by the way. That's your login ID. That's what you need to give to me so I can enable stuff for you. Then go to accounts and billing, and in here under accounts and billing, you'll have a thing that says, it'll say get more data or something like that in here. Get more data. And this is it right here. This is what you need. CME, CBOT, COMEX, NYMEX, the CME group. It's $7 a month for real-time data. You got to get that if you're going to trade futures. Okay, if you're not trading futures, you don't need it. But if you are trading futures, get that. All right, that's the beginning stuff. I want to get all that out of the way. Now, back here, the Tesla that I had told you, that I was looking at it. I was looking at it on Monday. I had suggested it to everybody on Monday when it was $5, and since then, let's see, the last one that I have. Okay, I gotta move that to the other side. The last one that I have open for Tesla, I think. I wish I could find those screenshots that I have somewhere. Trading IQ. They should be in downloads. Oh, here they are. They are in downloads. The initial one was right here. This is what I was trying to bring up for you a minute ago. They were $5.05 right there. $5.05. And the latest one that I took a screenshot of is right here. They were the 255s right here. They were $13.62. So that was from Monday at 1 o'clock to today. $13.62. And that's just trading, just trading options straight from the signals that we got here on TV trades. Now I got that. It was on a 50 range, but it was back on Monday. If I go all the way back to Monday, I'll show you where the trigger was. I'm gonna click Alt and go back. Monday was what, the 8th, right? So it was right around here. This one, right here, Monday morning. It was either this one or this one. One of these right here is where I said, we're getting a long signal on Tesla right now. And I showed the options, and I said, this is how you do that. I mean, you get a long signal, and you go and search out the options. And, some people don't know how to trade options. Some people are afraid to trade options because the word on the street is that most people lose money with options. And that's true. But some people buy options just to have them as options in case they need them to hedge. So, they let them expire on purpose. But other people buy options to cover things that they have. there's a lot of reasons to buy options and to let them expire worthless. So the 90% number, it doesn't take into account the people that mean for them to expire worthless. But still, it's a whole thing that most people don't understand, and when people don't understand it, they just walk away from it, because it's a lot easier to walk away from something that may give you a whole bunch of money, a whole bunch of potential profit, than it is to sit down and try to understand it if you have a really busy life. So, let me just take a moment and explain a little bit to you about options. Alright? What time is it right now? 3:11. Alright. I'm going to try to keep this on a pretty good schedule here. The one thing I have the beta on here, but I don't know if I have the hot tips on. Let me see if I got them turned on. Come on, don't lose. There we go. I don't have them turned on. Okay. So there we go. We'll turn on the hot tips too. Okay, so this trade back here on Monday had a hot tip right here. And for those of you guys who don't know or don't remember, the hot tips we talked about in last week's meeting. And the hot tips are trades that tend to run a lot longer. Alright, if you get the white one right there, they tend to run a lot longer. Now, I said I would give the hot tips to anybody who was on the trial or anybody who was subscribed who asked for it. So if you want the hot tips, it's in the beta version. It's not in the regular TV trades version. Right? I'm still working on some things. I have some really cool stuff that I'm working on for you. But it's in the beta version right now. And so the hot tips, they show up here, and they also show up on the mid-trend trades. I'm still working on that, but they show up on the mid-trend trades too, if you want them to. Put the mid-trend trades on. I don't know if we have any examples of it here. It's not going to be as likely to happen on a mid-trend trade as it is on an actual trend trade. The beginning of the trend trade, trend change trade, the blue ones and the red ones. I don't have the red ones turned on, that's why you don't see any red ones in here. All you see are these long options, all these long signals. But anyway, the idea behind it was, if you get a white tip like that on it, there's some things that are going on in the background that usually mean that it's going to run pretty good. So when I got that white tip, it must have been this one and not this one that I said that Monday morning. I said, okay, it's a good time to go look at options. And price actually pulled back from when I said it. We hadn't had a reason. I said I was going to tell you a little bit about the diamond principle. I can't really do it here, but I can take a screenshot and do it with a screenshot. Yeah, let's see. Let me just do this. Do new. And what I was doing back then on Monday, when the screenshot pops up here, and I can draw on it for you. What I was looking at was this right here. This. After we got the white thing right here, I was too late to get it right at that time when that happened. It was too late to get it, but what I was looking for was a pullback in here, and then a push up off of that. So when it came down here, I was looking for a pullback and a reason to go long. That's what I was telling everybody. And the price, when I first started looking at it, it was over here, and it was like $5.50 or something like that. But it dropped down some more, and it got down to $5.05. I said, all right, well, all we need is a reason to buy it. And like right in here, we got that blue arrow, and that was the reason to buy it. So I was working off of this hot tip over here that suggested that it was going to run a long way. All right. Now the whole diamond principle. This goes partially to the stuff that we do for the people in the room in the morning, but for everybody, the principle is like this. All right. You have the markets always do the same thing. All right. They always go up and down like that. Right. You kind of lost the color in there. Up. Hang on, let me get my screenshot back. We lost the color because I was doing it on the screenshot. Let's do it with yellow here. They go up and down and up and down and up, and eventually, they go down and like that. And so for equities, we're just trying to buy on the dips, right? We want to buy on the dips. That's the mid-trend trades. They're trying to buy on the dips. The trend trade, this one right here, is trying to buy it over here. Okay, when it starts. And then the mid-trend trades try to buy it on the dips. So I was looking for a dip in here for it to pull back. And the diamond principle, that's a term I've coined now. That's my term now, for those of you guys who don't know. You've heard the square principle. Some of you guys that have been following us for years and years, you've heard the square principle. Well, I've created the diamond principle. When price pulls back like this, okay, let me draw the whole thing for you. When price pulls back like this right here is where price should go back to. At least, at a very minimum, it should go back to that level. But it should have enough momentum to double this length right here and make it up to here. Like that. Okay, that's my diamond principle. And you'll see that it does that over and over and over again. So that's what I was saying on Monday when we had the opportunity down here, and this is what it was looking like. It gave this big push up, and it was like this push up right here, and at that point it was up to 254 from 246 up to 254, so that's 8-point move, $8 move. So I was thinking an $8 move from right about here, from 255, 254, 255, it gets up to 262, which should be somewhere up here at the top of this, right? That's what I was thinking was going to happen, based on the information that we had. And if you look over here, well, currently you see these are the targets and where price has been, but at the time I didn't take a screenshot of it at the time, but that's what I was looking at, right? And so all this information is just there for you. You know, when you have TV trades, you don't have to think about any of it. It just gives you this, and you say, okay, that's an opportunity to go long. Go long on the actual equity, go long on the stock, or to look at options on the stock. And, you know, you don't have to risk much. Now, with options, of course, you know, if you're buying options, like I said, you're buying calls or you're buying puts, not selling. But if you're buying calls or buying puts, in this case, you'd be buying calls. If you buy calls, your maximum risk, I'm sorry, I'm not even looking at the questions. There's only a couple of them, I think. Shabab, that's a whole other thing, okay? If you're buying options, your maximum risk is what you paid for the option, all right? Now, the options are not a zero-sum thing where, you know, every buyer does not have a seller, every seller does not have a buyer. So if you buy options, you got to sell them when there's still buyers that are looking to buy them. All right, because you could get into a call option, for instance, and the price just tanks, and you're not going to be able to sell that call option. You're stuck with that thing until it expires. That's the 90% that lose money in options. So to look at something like this, the way I usually do it. Now, this is the Greeks, and I'm not going to get into all of that, but I'll summarize for you and tell you when I look at options. Let me bring that picture back up that I had up here. The very first one, this one right here. Usually, the first or second one out of the money is usually the one, I'm not the first or second, the second or third one out of the money is usually the one that's going to be the best price option. Now, the 255, it was the second out of the money when I first looked at it, and then it became the third out of the money. But that's the one that I usually like to look at. You know, you got to look at things like the open interest, make sure there's going to be open interest when you want to get rid of it. That's important. All right. The volume on the actual thing is important, but the open interest is important. If you have no open interest, you don't want to get involved with that one. Find one that's nearby that does have open interest. But and when you're buying and selling options, you can split the spread here when you put it in order to buy it. You know, you can go at market and you're going to get it at ask, or pretty close to ask, or you know, if you're buying or selling, you're going to get it at ask or bid, pretty close to the ask or bid. But if you're buying and there's a big spread in here, you can split the spread, and there's buyers on the other side. No, well, if you're buying, the sellers on the other side that might sell it to you for that in there. You know, so you can split the spread. A lot of times it'll, you know, you get filled on that. But just a little bit about options. All right. So this option right here, just move the decimal place over 2 spaces. All right. It's $505 for one option for a 255 call. And by the end of, you know, from then till now, that $505 turned into $1,300 from Monday at noon until now. Just a quick explanation of options. I just wanted to show you guys all this so you can see another way that you can utilize this stuff. If you want to get into that, there are There are a ton of ways, a ton of places you can go and learn about options. You don't need to learn everything there is about options. You just need to learn the basics, especially to start. You're not going to be looking to buy calls, buy puts. You're not going to be looking to sell options. You don't want to do that. That's unlimited risk. But, hey, Angel. So, what time is it right now? 3:21. I spent 21 minutes talking about that. I did cover the basic stuff, though, so I spent like 3 or 4 minutes covering the basic stuff. So back to the Motley Fool stuff. Now, you know, in the beginning, my whole goal for this was to get out of being pigeonholed into futures, because I've been doing futures, for almost 2 decades. I've been doing futures, and I've been trading, for over 4, but I've been doing just plain futures for almost 2. And I wanted to get out of the futures pigeonhole and get into equities, because the equities is a lot more people, and I think I can work with a lot more people and help a lot more people and do a lot more good that way than I can with just a small futures community. So the problem then becomes, well, okay, so you say you can give me a good point to buy a stock. What stock do I buy? Right? The question becomes, what stock do I buy? How do I know what to buy or when to buy or anything? The when to buy is what I work with. The what to buy, that's on you. But so I thought I would just throw this out there with the whole Motley Fool's picks, like the Zach's picks. You can go look at any top 10 picks, all right? And at the beginning of the year, in the middle of the year, anything. This is why I'm doing the review right now, so we can see how the picks did and how you could have taken advantage of it, best taken advantage of it. Now, going toward the picking of the stocks, there are other ways you can do that. If you come in here, like I have this on the website right here, Precise Entries for Any Stock. These are all equities. And you can filter this with earnings this week or earnings next week. If you do earnings, I can do it on earnings next week. Go into filters like this, and you do upcoming earnings. We'll do next week's earnings, right? This month. I thought I had next week. Yeah, here it is right there. Next week's earnings. And then come down and say you want only things that have a volume of greater than 1 million shares a day, have a market cap of, let's say, I don't know, 50 million market cap. Good volume. You want to have some good volume every day. You want to be able to sell whatever it is. You can go down here and and pick through that and set your filters, okay? And then come in here and then sort them by technical rating, all right? So go in here through the strong buys and find something that's in your price range. There's a ton of things in here. Anything that's in your price range. Then you can just click on it. You can click on it, and like let's say this here, you see, I don't know. This is just a random thing. This is totally random. Let's just click on this FNB. I don't know what it is, but if you click on FNB, what does that bring up? FNB Corporation on New York Stock Exchange, and this is what it looks like today, right? This is all today? Yeah, this is 1 day, so this is what it looked like today. So from 1366, it ran up to 1391. That's what? 130 would be 10%, so 70 would be 5%, so that's only about 2.5% today gain, right? Something like that. But if you look at FNB, let me get out of this and go back here where I was. I think it was this one. Yeah, this one. Let's just bring up FNB on this price chart right here on the Netflix one. We'll do FNB. And FNB Corporation, and this is what it looked like today. So look, right here. Now this is on a 50 range. Obviously, a 50 range is too big for this because this puts us back in November. But you had the white arrow right back there, and if you would have bought options on the white arrow back there, obviously would have done really well. But 50 range is way too big for this. It doesn't have enough volatility to do a 50 range. So what that means is every bar is 50 cents. So let's do every bar is 10 cents. Okay, we put it on a 10 range. That means every bar is 10 cents. And there you have more information. So this puts us back to June. so it doesn't have any volatility at all. But you can see that this was just a random stock. But it's still, you can see how it gives you all the information that you want just automatically without having to do anything. And if I put the shorts on, you're not going to sell. You're not going to. Well, I mean, you can. I'm not going to. I'm not going to get into that how to short stocks, but it's a whole other subject. Maybe I can do that as a subject thing one Wednesday. But you can see that this is just a random stock and it gave you a great entry right here. Now, if you go on to a smaller time frame, or if you like a lot of you guys like to use minute time frames, I do not. Okay, because that forces it to the next bar, whether the price action suggests it should go to another bar or not. It forces it to the next bar. But you can see here, July 10th, Wednesday, July 10th, it gave a long trade right here. The stop on that would have been right down here. So all this stuff right here in the target box is based on this long trade right here. And I don't know if I have mid-trend trades turned on this. I don't. If you turn on mid-trend trade, you had more opportunities to enter here on the way up. And you can put more targets in the box. If we have more targets in the box, then it's got targets all the way up to 1435. So it's hit. This target number 2 is hit. Target number 3 is hit. Target number 4 is next, and then target number 5 is the one after that. So you can see how this works with stocks and equities, and you can just randomly get in there and see how good it works. So I've spent 27 minutes now going over this, and I haven't even gotten into the Motley Fool thing. Motley Crew. That was a long time ago. Let's get into that. Alright, so CrowdStrike was the first one. We'll just look at CRWD. Okay. And now when I was first doing this, I think I was doing it in January, and I don't know what time frame I was doing it on. I think it was on a 30-minute chart, or maybe a daily chart. I don't remember, but it was in January. But either way, you can see here it was given great indications. This is a 30-minute chart. Back then, I think I was doing it on a daily chart, though. And it was back in January. Because I know CrowdStrike was one of the ones that he really nailed. Right here, the 19th of January, 23rd of January. No, they got it better than that, I thought. Well, I guess it was right here, 23rd of January. They said to buy, somewhere in there in January, they said to buy CrowdStrike. And from here, it took off. 106.43. I don't know what the high was from there. Yeah, 106. It's gone up 300%, up to 364. So where do you buy that, right? And what good is that? What good is that to you? Well, look, you got your hot tip right there, and that suggested that you're going to have a good run after that. That was back in May. So if you're doing equities, or if you're thinking about doing equities or options on equities, then this is just awesome. And it just gives you great entries to be able to trade equities or trade options on equities. Okay, that was CrowdStrike. Let's look at another one. Let's look at the next one. Was PayPal. What's that? PYPL. PYPL. And we'll go back to January on that. Again, right here in January. Nope, that was November. Sorry. Where's the January one? Here in January is where it was. Okay, so it gave a long trade right here in January on the daily. So it didn't work out that well on the daily. It would have stopped you out right here a few days later. But as you go through here in March, it gave you a great one right there. It gave you one right here that didn't work out well either. Now again, your stop on this is going to be right here. Right here. Okay, so this information that's given you in here is telling you how big the stop is in dollars. So your stop would have been, that's a big stop for a $60. You probably wouldn't want it to do a $62 stop. So if your stop's too big, you probably don't want to do it. I want to show you one more thing in here. I have this risk reward that you can look at. And if your risk reward is less than 1, you probably want to skip it. Alright, your risk reward should be 1 or greater is what you want. And what that is showing you, is the difference between your entry and the first target divided by the difference between the entry and the stop. And that's what that's showing you. So you want that to be a positive number greater than 1. Alright, So that's PayPal. Let's look at the next one. I had no idea what these things did after January. I wasn't watching them anymore after January to see what happened. But right in here, you had a great indication right there. Now that was before I had created the mid-trend trade. If you go and look at the actual recording of this from way back then, I don't think I had this computer then, so I know I don't have it on this computer. You can go out on YouTube and watch it, but things looked a lot different then, a lot different. The arrows were not like this. There were little square arrows down here, or not square arrows, little fat rectangular arrow, not rectangular, little fat triangular arrows down here at the bottom, but they're little fat ones, like you see with the mid-trend trade warnings that you see. Like look at the NQ, like this one right here. They all used to be little arrows like that down at the bottom or at the top for longs and shorts. And the actual, I didn't have a target box. It actually just put information, wrote it on the chart, and it was a mess. It's come a long way since then. The next one is Mealy. You can look at Mealy. Do you guys? I'm looking up here. Does anybody have any questions? I should ask that. It doesn't look like anybody's asked any questions for like 20 minutes. Am I not seeing the questions? Okay, here's the question box. Alright, well let me keep going. The futures, let me just hit futures because I know, Shabab, you're interested in futures right here, right? So this is a 30-tick range on the NQ. 30-tick range on the NQ. Every bar is 30 ticks. Alright. These are mid-trend trades right here. The ones that happen in the middle, the mid-trend trades. The one that have a little black arrow. That's going to give you a notice that says you have a buy coming up. So like this black arrow right here on the NQ at 1408. Right here. NQ 30 range buy condition right here. NQ 30 range buy coming up. I don't know if I click on that, it should bring me to it. And this one right here. NQ 30 range buy condition met. That was the green arrow right there. It was a buy condition was met. This is the one right here. Or somewhere in there you got a warning. This triggered a warning to let you know that you had a trade coming up. Alright, and this was the actual trade. Sometimes you get a green arrow that doesn't have the little arrow before it. That means you didn't get a warning that the trade was coming up. But a blue arrow like this, if it's preceded by a blue arrow that's on top of red like that, you did get a warning. Like this right here gave a warning that there's a long trade coming. Okay, not a warning, a notice. Sorry, not a warning. Like in here, where it was all bearish right here, and it gave this bullish thing right here, you got a notice that said there's a long trade, probably a long trade coming. And and in here, where it was red on blue, you got a notice that said there's probably a short trade coming. It would have come right after this one here that said you have a long trade coming. This would have said there's a short trade coming. And I don't have the shorts turned on, otherwise you would see there's probably a short right there. I do have the shorts turned on. Okay. Let me shut off the bias. That'll probably trigger the shorts. There it is, a short right there. Okay. But that's how all that works. So, you're going to get your indications in here during your mid-trend trades. The red and blue ones are the ones that change at the change of a trend, more near the beginning of the trend. Alright, that's where you're going to get your red and blue ones. What pivot number? Hang on, I have to sneeze. Okay. You can just use the default pivot look back number for the 7 ES and the 15 range NQ. That's going to give you what I normally use. Alright, but if you're doing that, the question, guys, is what pivot look back number should I use for a 7 range ES or an NQ 15 range? Let's just go and do that and I'll show you what the difference is, okay? It's important that you understand what that thing is showing you in there. Let me put a bunch more targets on here for you. Okay, so these targets have been created from this blue arrow right here, is what these targets are created from. And, oh, it doesn't have any more targets because we're at all-time highs. It doesn't have any more targets. If it did have more, it'd show you more. But that's going to make this difficult to do. Let's go back somewhere where we had some more targets above us. it'd be after we had, here, let's do a short. It'll have more targets on the short side. Okay, we'll do a short that says there are, hang on. Because we're going into all-time highs right now, it complicates things a little bit. Right, let's use this right here, because with the range bars, I can't do a bar replay. So I got to go to like a 5-minute bar, and then use a short like this right here. Okay, because I can't use the longs because they're going into all-time highs. So let's grab this short right here, and I'll do a replay on this. You'll see what I mean. So we come here, and when it brings it up, it's going to give you all these short targets, right? And if we throw the risk reward on there, okay, see, risk reward is horrible right here. And what that's basically saying is your first target is right below the entry point. So your first target is like right here, is what that's saying. Or maybe it's from here down to here. That would be your first target. 703.25, is that what this is right here? Yeah, 703.25. So this is your first target right here, because your entry point would be right here, and your first target would be right there. So that's a horrible thing to look at. But if you go in here and you change the look back number, that's what he was asking, the pivot look back. If you make this a smaller number, then it should look closer for targets. Okay, this one, it's not going to find anything, well, maybe if you make it really small, it should look closer for targets, and then that will change the numbers in here for your targets. This is just a horrible example, but it would change the numbers in here for targets, and if you draw the pivots, it'll change where the pivots are. Okay, because that's where your targets are coming from. Draw pivot labels. Here they are. Okay. So if we draw pivot labels with just a 2, you see how they're all over the place here. So from here, it would look at the next pivot down below this level. Well, below this level is what it would look at. The next pivot down below that level, which is still going to be that one. But if we go a little further to the long trade right here, I think that would be a little better example. Let's do a little bit further and go back to here, and it goes to long targets, because it'll look back at all these pivots. And you'll see in here that it's looking back from here to right there is the first one, then right there is the next one, then right there is the next one, and right there is the next one. If you bump that up to 10, where it normally is, I'll move this over here. If you bump it up to 10 where it normally is, oops, 10 where it normally is, you're going to see all these pivots change. See, moves it all the way up there. So I use the default all the time. I just want to make that available to you, because sometimes those targets are so far out. Like your risk reward on this one, now it went from being point whatever to 3, which is awesome. But you may not be wanting to wait for it to move that much. It depends how you trade or who you are as a trader. But okay. Hopefully that answered your question, Shahib. Shab. Okay. And so I still use a 10. I use a 10 by default, unless the targets are so far out that I want something closer for a target. I want to look at something closer, then I'll reduce it. Right? Or if the targets are too close, then you can make it bigger. Like some of those things that the target's like right next to it like that, you can make it a bigger look back, and then it'll look beyond that target for a next one, or that pivot for a next one. Okay. Alright. If the MTT arrow pops up without the prior black arrow, can you take the trade on that or not? Yeah, you can. Let me get out of the replay thing here. Okay, as I get out of the replay, let's go back to the this is the NQ. Let's just go to a 15 range on the NQ. Okay. And what do I have turned on? We have the mid-trend trade turned on. Okay, so the mid-trend trade right here that's got the black arrow before it, compared to the mid-trend trade that's got no black arrow before it, the actual thing that triggers the mid-trend trade is just a little bit different calculation. The calculation that I had that does this one right here was great, doing that one. And what I was doing when I created it, I was looking for a way to let you guys know a bar ahead of time that you were going to get a mid-trend trade. And I came up with a whole new calculation for developing the mid-trend trade that did give me that information, but it didn't give me the information for this one. So this is still a great mid-trend trade, but I found another calculation that gives me the bar warning. It gives us all the bar warning, the bar notice, and it gives us a great entry on the mid-trend trade at the same time. So this was the original one that I did, that I put out. If you go back and look at the releases, and I'll show you how to do that in a minute. This was the original one that I did. And then when I was trying to figure out a way to let you guys get a notice ahead of time, a bar notice ahead of time to let you know that that was coming up, I actually created this formula that this mathematical formula just appeared in front of me, and I created this formula that it was equally as good as the last one, but this one actually gives you the notice too. Okay, sorry. I've been having to blow my nose constantly since I mowed the lawn on Monday. That never happened to me before. I hope it's not an age thing. Anyway, to see the latest releases and stuff like that, not necessarily there on the beta because you guys don't really have the beta yet, but if you go in here to the regular TV trades, and if you go here to this, read more, you can do it from there, or you can do it over here. If you click on this and you go to about this script, you'll see all the releases as I did them in here. Alright, and the mid-trend trade, the first one that I did, I think I did this, added the mid-trend trade feature, and then like a week later I added new mid-trend trade features in Logic. So it was like a week in between when I did that, and I was so excited when I did that because it was something that it was like a Thursday or a Friday, and it was something that I just couldn't figure out, and then finally I did, and I was so excited I just released it right away. And then I found more stuff to make trading even better for all of us. Alright. So I didn't finish going through the recap of the Motley Fool stuff, but what I really wanted to show you with all that, what time is it right now? It's 3:44. I only have 16 minutes left. What I really wanted to show you with all that, guys, was that this stuff works, no matter what. You know, the Motley Fool stuff started in January, but you have stocks that the Motley Fool said were going to go up over the year. So you know, when you're buying stocks, you're just thinking of buying stocks. You know, I went through the thing on the website, wherever it was, on the website, and I found this thing, and Fitbit was another one. FITB, I think, was another one that had earnings coming up. That was in here, wherever that was, that we did that. But you can go through that if you want to find stocks that you can buy if you want to, that are likely to move in the coming week. You want to buy something that's not already moving, hasn't already moved, and get it ready and get your alerts set to trigger on whatever it is that you want to do. And then when you get that alert triggered, if they have options available, then be ready to trade some options if you want to. Now stock options, you can trade those in a lot of different places. I use Schwab. It used to be Thinkorswim or TD Ameritrade. That's what I used to trade stock options. Schwab, a futures trading room. We do have that, but it's not related to this at all. Okay, it's not related to this at all. It's a total different thing. It's got a big upfront cost and all that. I mean, you're welcome to go there if you want to. It's at mytradingiq.com if you want to go check that out. But I'm teaching people how to trade in there. In here, I'm not really teaching you how to trade. In these meetings that I do once a week with you guys, I'll teach you stuff. If you ask questions, I'll teach you stuff and I'll show you things. But in the mornings, every day, that's part of the deal over there is the training, where I teach you how to trade, not just when to trade. All right, so more of the stocks. We can look at some more of those stocks if you want to. I don't know. Are you guys interested in looking at any more of those stocks? There's PayPal there. Let me look at another one. Here. Did we even look at PayPal? I don't even know if we really even looked at it. There was Motley. Motley was another one. I thought they nailed that one pretty well too. Motley. I mean, they did really well with their picks in that January. For that month of January. Yeah, November, December. Here it was in January. So December, and here it started. Now I didn't have. This is on the daily chart. I'm almost sure I didn't have it on a daily chart. I thought I had it on a 30-minute chart back then in January. That's going to be a long way back here, I guess. If I do this and I hold it. But anyway, I'm not going to go through all that with you. But you can see in here that the hot tips, they're giving you great indications of when you're going to have a big run. Right, and that was one on the mid-trend trade. You don't see too many on the mid-trend trades. Another one on the mid-trend trade. But either way, you can see that you're getting really good indications on equities as well. And this is on the 30-minute chart for Motley. And you can see in here how much you're going to have to risk when you get into a trade. And this is a $1,700 stock on a 30-minute chart. So the $1,700 stock, you're risking 13 bucks. On this trade right here, you're risking 13 bucks. And I don't know what the stop was. The first target was 1690, so it had a 6-to-1 reward ratio. That's pretty awesome. And that was that one. Airbnb was another one. I'm pretty sure Airbnb did well too. Airbnb. I know there was one of them that really, it started off well and then it stunk everything up. But I mean, I don't need to go through all this. You guys can see it all. Here, I'll show you this is what the picks were right here. So if you watch this video after the fact, you can see that these are what the picks were. And I mean, you can go out on the website anytime. You can probably go out to Motley Fool, go to Zacks, any of those places that they have their top stock picks that they just throw out there online. A lot of times they'll throw them out there after they've given them all to their members. Then they'll put it out online for everybody else to see. And if you get that information for free, and you can use the TV trades to find out when to enter in that, as it's still going up, it's still still doing what they said it was going to do. It's just a great opportunity to take advantage of stuff that is there for you. Somebody else did all the research on it, and you just got to find the right spot to enter it. All right, it's 3:49. I have 10 minutes left. And I answered your question, right? Oh, you said what would the stop loss be on a 30 range trade? Okay, on a 30 range trade, it depends. Okay, let's go back to that, and I'll show you. Let's go back to the NQ 30 range. Okay, let me find that thing. 30 range. Look at that awesome pick right there. None of these lost. If you just traded the 30 range since 11 o'clock today, you made a killing. A killing. Jahab, that's what you were asking about earlier. If you had one contract and you ran each one of these trades for 30 ticks, and every one of them went more than 30 ticks, but if you ran each one of them for 30 ticks, that's 1, 2, 3, 4, 5, 6, 7 trades since 11 o'clock for 30 ticks. That's 210 ticks times 5 with one contract. It's $1,050 per contract, and that's just running it for 30 ticks. If you had, let's say you use the actual targets that were there, or you use the prior swing highs that were there. If you use that for your targets, and you're getting more than 30 ticks on every one of them. And if you use the diamond principle that I just described to you a minute ago, let me go through that again one more time with you, okay? If you were using that principle that I just described to you, and that's mine, I coined that term. But we'll do it right here, okay? We'll do it right here with this. And we can do it with either one of these. But on this screenshot, what you're looking at is this right here. As you pull back down, that right there is you push up. That's your level. This is your stretch. That's what it should do there, and there, and there, and there. Make sense? So if you use that on each one of these, instead of just saying you're going to have a 30 by 30 bracket, or the question was how big should the stop be? For mid-trend trades, the stop should be about 35. For the blue arrows, like this, it's going to give you the stop. It's going to be greater than 30, but it's going to be the prior swing low. Like this one right here, the prior swing low is right there, so your stop was 13.75 points. Okay, so it's 13.75 times 4, whatever that is. Let's just say 14 times 4. So it was a 56 tick stop. Is that right? Yeah, 56 tick stop. In that case. Okay. How do you know you should use a 15 range or a 30 range on the NQ? How much do you want to risk on a trade? How often do you want to trade? How much time do you have? A 15 range, you're not going to have as big of a stop. If you do the same stuff right here, if you move it down to a 15 range, and we'll see what it comes up with for a stop. Down here, okay? Over here your stop is no longer 14.5 points, it's now 7.5 points because you're on a 15 range. Okay, so how big of a stop do you want to have? What are you comfortable with trading? See that hot tip right there? I nailed it. Now any of you guys who are in here who either sign on for the trial or you're in here and you're a subscriber, if you want access to the hot tips, send me an email at support@targetvtrades.com, support@targetvtrades, and just say hot tips and put your TradingView login ID in the email. Okay, put your TradingView login ID in the email. This thing right here. For me, it's TV Trades. Okay. In the room in the morning, and yes, I do a room in the morning, but again, Shabab, that's mytradingiq.com to get to that. And there's a big upfront cost and all that, but that's where I teach people how to trade. In here, you just trade. It just gives you the information. You just trade, and you take the risk associated with it. Okay. But when I do the room in the morning, I use a 15 tick range on the NQ because it runs so fast that it's just really, really hard to do. Okay. I tried it on smaller ones before. And if you're using range bars and using things that are in 4 tick increments, like the ES and the NQ, you should use a 4 tick increment minus 1, 4 tick multiple of 4 minus 1 bar size. So like I can say, the bottom of this bar is right here at 912.50, so I'm going to buy 916.50 if I want to buy in up close. It'd be 1 tick above the top of the bar if I'm going to be proactive on something like that. See, this just gave the long trade right here. So the table, if we had anything above us, we don't have anything above us. You see how there's no table? There's just this little black dot right here. That's because this is an all-time high. There's no pivots above us. So I got just 5 minutes left. So I'll tell you one thing here. This is part of the training that I do, not so much just telling you when to trade. But when you have a spot like this where you don't have any more levels above you, that whole diamond thing that I just showed you, that comes into play right here. And leg lengths comes into play as well. Alright? So the diamond thing, what we'd be doing right here with the diamond thing, be pulling back to here, up to here. This is the distance right here that it should make up above this level right here. That's what it should do. Now, did I say that too fast? Let me take a picture and then I'll draw a picture for you. It'll make sense. Okay. I want to make this picture a little bit bigger. I'm going to grab it again when it comes up. Here it is. Okay, I want to grab it again when it comes up. Oops, that's not what I want to do. Yeah, this is what I want to do. Come on, give it to me. There it is. All right. So, in here right now, the diamond principle has it like this, okay? Has you going like this, back up to here, and like that. Right? So this distance right here, up to there, out to there. But these are all-time highs, right? These are all-time highs. So you don't have anything, you don't have any pivots over here for it to look back to. You know that whole pivot thing, that pivot number, pivot look back size? That means nothing here because you don't have anything over here on the left. So it's not going to find any targets. That's what this little circle and that little square is right there. That's the target table with nothing in it. That's what that is right there. Okay. But what you do have is what price has done already. It's done this right here. It's done that leg, and then it repeated it, and then some a little bit. It repeated it right here. It was about the same, but then it went a little further up to there. Okay. Right here it got choppy and sideways, and then it pushed a little bit further up to there. And then right here what happened, it pulled back here, and if you do the diamond, this to this, and this distance right here, up to right here, bang, 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 pretty much. Alright, it didn't quite get all the way up there. It might be up there right now, I don't know. We'll go look in a minute. But what I'd be looking for is this right here, this leg length right here. This spot from down here up to like right here is what it should do. It should repeat that leg length. Now I don't know what it's done, but that's what it should do. Okay, and that's what it's about to do. So if I draw that in here for you right now, if I use the actual leg lengths, I think I was using, well, we had just this little bit of information over here, and I'll use from here to here. Okay. That repeated itself there, and that should repeat itself here. And if we go through the diamond stuff that I just drew on the other thing, the high of this right here is 923. 923, 924. That's what it should get up to right now. I mean, these are all-time highs, so it's having trouble right here. It's giving you a target right here because it's got this swing high right here. These are all-time highs, so it's having trouble right in there. Okay. This is good stuff. This is good stuff. And the markets, you know, they repeat themselves over and over and over again. That's what all this stuff is based upon. The market just doing the same thing again and again and again. And you getting just great entries. Entries at the beginning of it, entries in the middle of it, entries at the beginning, beginning. This one didn't work out, but everything else in here was working out pretty well. That one didn't work out. But you see, that's what it's all about. And now if you do this on the 30 range, if you go back to the 30 range on this, you'll see a lot of these are just one single bar. Like right here, the pullback is here, it's running up to here. This that I drew from the 15 range, I would have drawn a bigger leg length from the 30 range. I would have drawn from here to here, and that would have repeated itself right here, and I'd be looking at a little bit bigger leg length here for the expectation from a 30 range. Okay, from a 30 range I'd have gone from here to here, like this. Alright, from the low to the high right there, and the low to the high right there, and that's what I'd be expecting over here. Whenever it finds a low, that's what I'd be expecting. And it looks like it's going to end up in the same place as a 15 range probably. If it draws back a little bit more right here, that's what I'd be thinking. Alright. I've run out of time. It is 4 o'clock. I like to keep this to an hour if I can. If you guys have any questions, you know, if any of you guys who are in here, if you come up with any questions after the fact, you can always just email them to me. Alright, you can always just email them to me at support@targetviewtrades.com. support@targetviewtrades.com. If you are not on the trial yet, or you're not subscribed, go here to the home page, and you can get signed up right over here. There is a free 3-day trial for the monthly and for the weekly. And this is actually a bigger discount than I thought it was. but it's a 23% discount, I guess, if you sign up for the annual. $9.97. That was, you know, way back in like 2005. We went from the business model one business model to another business model. $9.97 was the price we charged way back then. And things changed a lot. Anyway, this is where we are now. If you want to sign up for the trial, it's $25 a week after the 3 days, or $90 a month after the 3 days. Alright, if you're not already signed up, sign up. If you are signed up and you don't have the hot tips and you want these, this is in the beta version, right? The TV Trades beta. Send me an email at support@targetviewtrades.com. Put hot tips and your TradingView login ID. You know, this thing up here. When you hover over this, TradingView login ID. Give me that information and I will enable you for hot tips as well as regular TV trades. Alright? Alright. That's going to be it, guys. I think I'm going to wrap it up there. I don't remember what my subject matter was. What did I say it was? Let's go here to the website. I said it was going to be the Motley Fool 6-month recap. I did that for most of them, not all of them. The hot tips webinar, I did a little bit about the hot tips. I didn't say anything about the stocks in here. I mean the stock options. I spent a little time on the stock options because I think that that is a great opportunity for all of you guys. If you don't trade stock options, the TV trades, now if you're only stuck in futures, you're in the futures world, and you want to look at other stuff, other things, the TV trades is there for you for everything. You can trade options on ETFs, options on futures, options on stocks, options on everything, and options on crypto now if you want to. And you get great indications here of when to get in, when to think, when to expect something's going to go up significantly, and you get it right at the beginning most of the time. So I wanted to show that to you so you understand what you have at your fingertips. Alright. Alright. With that, guys, I am going to wrap it up. I want to thank you all for coming today. Again, if anybody has any questions about anything, see, on my phone right now, I just got a buy condition met on the NQ30 range. So, this is the NQ30 range. How did I get a buy condition met on the NQ30 range? I don't know. My phone just said that. Alright. So, with that, I am going to wrap it up, guys. Again, I said that like 3 times. I really am.